people who borrow the loan before the BR was introduced? This is my question.
OPR is the rate that adjustable from time to time. It's happened every night. But the banks do not announce it every night because the change sometimes is very small. But they announce it periodically or when something arises, for example, during COVID-19. So there is something that they must do. So they just announce it by reducing the basis point. So basis point is the something like index. If you know index, like house price index, something like that, or consumer price index, something like that. So basis point is an index used by the Bank Negara Malaysia. So by reducing basis point, it's not exactly like index, but what I mean here is the concept. The concepts like index. So by reducing the basis points for the sake of economy, so basically the rate will also decrease. So when we see BLR still exists, but in terms of application, the banks nowadays use either BFR or BR. So the reason is BLR we used last time based on the gross income. So from gross income we use BLR. So BLR usually we deduct the same like BFR. We just deduct from the percentage. So when come to BR and the present BFR, so basically the Bank Negara Malaysia make a new rulings. So because of that, the BFR, they use other formula to establish BFR. So BFR and BR. So basically, the BR usually much lower than the BLR. So the same for BFR. So when it comes to application, that's why last time, if you look at BLR, most of the financial institutions, they put BLR minus 2%. BLR minus 3%. The reason is for the marketing people, we make it more attractive, and then the rate will also become lower than BLR minus 2%. So basically BLR minus, because the rate used at that time for BLR is high. Even now it's still high, but we do not apply. It still exists. But when it comes to BR, the way that they estimate is a little different, and the BR is much lower. For example, nowadays the BR is only 2%, but the bank will make profit by plus 2% or 3% or 4%. The higher the plus, that means they become not that attractive as compared to the lower the bank plus percentage. So the same thing for BLR last time. The higher the deduct, the more attractive the mortgage will be. So that's from customer perspective, especially the lay people. But for people who know about it, like me, for example, I'm not using minus or plus as the base point, because I will do my own calculation. I will look at my own purpose. Why do I need this loan for? Why do I need to purchase this property for? And then I look at my present income after deducting all of the existing financing, compulsory financing that I have to pay. And then I know my eligibility, and then I'll try to see which banks should I take, should I apply for the loan. I do not look at the minus percentage. Okay. Yeah.
Doctor. Okay, somehow okay, but just wondering, like, let's say if the OPR right now is, let's say 3%, so the base rate of each bank cannot lower than that index, right?
Let's say the present what?
The today's OPR, the latest announced by Bank Negara is 3%. So the base rate for each commercial bank in Malaysia cannot lower than 3%, right?
The OPR, usually they use a basis point. So when they deduct the basis point and make it 3%, so 3% will actually become the BR. So from BR, then the banks has to come out with plus 1%, plus 2%, etc. in order to show how attractive the rate is. So let's say Bank A plus 1%, Bank B plus 2%. So that means the effective rate of interest will be 3% plus 1%, 4%. The other bank, 3% plus 2%, 5%. So from our point of view, obviously, the 4% is more attractive because it's lower than 5%. So you work that way. Okay. Yeah.
So effective lending rate is after including the profit rates of the bank already.
No, no profit rate. Profit rate, that's why plus 1%. 1% is profit rate. If plus 2%, 2% profit rate.
So base rate plus.
Base rate is the rate that the bank must charge without any profit.
Oh, okay, okay. So that one definitely must, like, according to the OPR set by the bank negara lah. Cannot higher than that lah.
They cannot, except Syagama. Syagama is different.
Oh, okay, okay. Okay, thanks,
okay.
Doctor.
Okay, now we go to our lecture today. I'll start to share the screen. If you have any question, you can ask. If you have time, you can ask after the class, or you can ask tomorrow. Otherwise, we cannot finish our lecture. I haven't recorded. It's taking time to record. So today you are supposed to join a professional talk, but I cannot allow you to go because we also do not have time to finish our lecture. But Dr. Ain'ni will record the session and then they will pass it to you. Something is wrong. I cannot record. I don't know why. It's taking time to record. Shall we start now with the recording, or you just want to wait until the recording is successful? Can you hear me?
Can, Doctor.
So I'm asking you a question.
We are still looking at the loading for recording. I guess.
Oh, you can see the recording.
I mean, still loading, Doctor.
Still loading, yes. I don't know what's wrong. Okay, now. Okay, now we go to our lecture. Can you see the screen now? Okay. So, today is our last lecture. And I guess this is our last lecture forever. I don't think I'll have any more lecture with you throughout the year. And this sem is the only lecture, and this is the only subject I have issue, because I'm taking leave next semester. So it seems like I'll get an approval very soon, because it has been discussed in the department meetings yesterday evening. But verbally approved, and I'm still waiting for the final approval from the top management, from top management. So if they let me take a leave for 9 months, so basically there will be no lecture between us. So based on that reason, the department decided not to give me any supervisory from this group. That means none of you will become my student, my supervisee for your dissertation. Although some of you approached me and developed the proposal together. So basically, the department decided not to give me any student. So therefore, you will get a supervisor from any of the department members, but none from my part. But it's okay. They are all equally good. It's just a matter of the way that if they cannot come up with the way that I expected you to do, they may change the objective and the methodology to different way. So it's all depend. But as long as they guide you to come up to the final conclusion of your thesis, then it should be good enough. So that's the present situation. So now we go to our lecture. So basically on bridging finance. So next session, you are supposed to learn real estate market research. So if you do not learn from me, that means you will learn from someone else. If the department decided to get someone from outside, a part-timer that involved in research and consultancy, it would be good for you. But if we take anyone from the department, I cannot see that any of them really involved in research and consultancy. Most of them are in valuation. Valuation is good, no issue. But when it comes to real estate market research and feasibility studies, I don't think any of the department members they can teach, but everyone can teach basically, but something that purely based on a theory without application. So it becomes, but it's okay, because as far as I know you, also you don't like to learn that much. That's why when I ask you question, you don't want to ask me. So whether any more practical or not, so it doesn't make any difference. But the thing is, whenever you ask the person who have experience in that particular field, hands-on experience, so sometimes you cannot deliver during a lecture, but when you ask us question, so basically we can deliver based on our experience, we can talk. But if you ask someone who do not have that particular experience, then we have to come up with theoretical answer. So for example, if you ask me something about land law, for example, so obviously I can answer, but the thing is, I cannot recall the section number straight away, because I left land law for quite some time. So the same thing for land acquisition. Dr. Anwar will be good in land acquisition, but if you ask me, I can teach land acquisition, but it's more on theory, because in actual fact, in the real situation, I did not have much experience in terms of land acquisition. only I think a couple of times when it involved submission to Securities Commission. So that kind of things. The beauty of having a lecturer with hands-on experience and the lecturer with without hands-on experience. So the purpose is we want to really guide you. You want you to be a professional, whether you like it or not. We know that whether you like it or not, based on your attendance to the class, your participation in the class, your question in the class. So we know already, because we have been teaching for, like myself, for the last 21 years in alone. Although I got an offer from other university in Selangor to join them. To at that time they offer me, to a better post from but I declined because I love to be in because the working environment, the facilities, available facilities, the number of students which are very limited to 50, between 50 to 55, which we control every year, not because no demand, but we control. If we really see the real demand, usually more than 200 applications every year. So based on that, I decided not to go anywhere. Just wait at University of Malaya. And recently, another university, international university in Johor Bahru, also offered me a better post as well. What I mean by better post, they with better salary in Johor Bahru there. But I said that I have to decline because they're looking for someone, from real estate finance in terms of qualification as well as working experience, etc. So they called me. I said no, I prefer to be in So that's another reason why I'm still in So I'm not sure who's going to teach you real estate market research. If real estate market research is something that very interesting. Basically, what I can say for you. But in terms of learning, it's not that attractive, because even finance, like you are saying now, is not that attractive. It all depends on the mood that you have, whether you really have interest in that particular subject or not. But in terms of application, if for those who are very interested, you want to ask a question, you can ask the lecturer. And then sometimes if I were to teach, so basically I can give you a bigger picture what is happening out there, because it is very subjective. There are so many ways that we do property market research. Do not think about property development alone. It doesn't mean that property market research will go to property development only. There are so many things. So if you do not ask, then I cannot explain, because my explanation is based on the lecture notes. If you find it boring, then you get bored easily. So that's nothing much I can do. The same thing for finance now. If you get bored because of the lecture, but there's nothing much I can do. But there is always a window of opportunity to ask me any question that I could bring from out there to explain to you. Okay, never mind. So we just follow to bridging finance because you want to be a quiet professional. That's why it's happened like this. Either you learning this subject for the sake of getting your degree, or you are learning for the sake of knowledge. Whenever you work, you will apply. So I'm not sure. Depends on your strategies. So we have seen the diagram, or the situation where we try to compare between the bridging finance and end finance. I think 2 weeks ago. So basically, if you can recall, that diagram. So we have already explained the end finance last week based on that diagram, and then now we try to see bridging finance. I teach bridging finance first and then end finance, but last year your senior seems a bit confused between end finance and bridging finance. That's why I decided to put bridging finance in week 14. So if you also confused next session when I come back from holiday, so next session I'll change it back if there is still no one to teach this subject. Okay, so in terms of bridging finance, so basically we have seen the term loan, and then it is convertible, or it can be converted to bridging finance. So the purpose is to help the development, of any project. So we have term loan which come from different sources. So the term loans is basically used to help to kickstart the project, especially for working capital, infrastructure costs, and then buying equipment, materials, etc., site clearance, etc. If the company still do not have the site, then the purpose of term loan is to purchase the site that is developable. So, and then when come to once we launch the project, then we need the bridging finance to start this construction of the buildings, because that means the developer have to, because once the SNP has been signed, so basically the project has to be started. Otherwise they cannot deliver the final products within 24 months for the landed unit, or 36 months for the strata unit. So that's why they have to. So we have seen how the triangle that we have for the bridging finance, and the peak borrowing requirement. So like I always said, when we use residual method, that's the reason why we use 33% of the actual cost multiplied by only half of the development period and multiplied by the interest rate. So that's the formula that we normally use. So if you convert it to cash flow, like you convert a variation term and reference last time, so you will convert it, when you transform the traditional method to Excel, to DCF, then it should be you should get the same figure. So the same thing for here. So if you use residual method, we can also transform it to a DCF in terms of assessing of the project. So basically, we should get the same value if we value. But if we try to get the return, because the residual method can actually be used to have two things. Number one, if you want to get a value, then we get a value. If you want to take the return for that particular project, then we forget about the value. We have to input a value as one of the variables, then we should be able to get the return. So we can convert it to transform it using Excel to make it a cash flow. Should be the same. So I'm giving you, try to illustrate here, a parcel of land was bought for 5 million per acre. So that means it's 5 million per acre. So we assume that the land size is 4 acres. So basically the total value that we have to pay, that means when it was bought, should be 20 million, because 4 acres multiplied by 5 million per acre, so we have 20 million. So now the developers applied for planning approval planning and building approvals, just assume that they have got approval. So we as a valuer now start to revalue the property. We use the residual method. So the 20 million before this, we use ordinary comparison method. You do adjustment without taking the development potential of the site. So it was priced at 20 million. You value at 20 million. So now after the planning approval, so you revalue using a residual method, the price now become 40 million. Assumption. Do not take it for granted by thinking that the price always double. It's not necessarily the case. But for if you convert from agriculture to commercial, for example, obviously the price will increase at least double the figure. So, but we still cannot determine the exact value unless if we do valuation. So, like in this case, we assume that it increased to 40 million. That means double the figure. So before conversion, the price was 5 million per acres. After conversion, now the price become 10 million per acres. So we assume that the total of 100 units of apartments, each unit sold at 2 million. Apartments means that we refer to maybe a condominium, luxury condominium. That's why the price is 2 million. So we assume that 2 million, maybe somewhere in, let's say, the city center. That's why the price is so high. So we only develop 100 units, and then each unit was sold at 2 million ringgit. So at the initial stage, we assume that only 80% managed to be sold. So as we try to see the figures that the diagram I've shown you before. So basically, when we start to launch the project. Once we launch the project, so the revenue line will actually increase, and it all depends on the strategies. So it may become a steep increase, or maybe a little bit down. So basically depends on the strategies and the market forces as well. So in this case, we assume that 80% managed to be sold, and then the loan to value ratio is only 80%. That means 20% should come out from our pocket. So if you look at in terms of a diagram illustration, so basically the land purchase for the first 1 to 2 years, once the boards of directors, for example, for corporate companies or for ordinary companies, syarikat sendirian berhad, they do not have board of directors, but they have a partner or shareholder. So basically, this should come. Should be in advance. They make decision. So once they make a decision, so they have to start to purchase the land if they still do not have the land. So let's assume that it takes about 2 years. It takes about 2 years to purchase the land, and then once they decided to purchase, so they can actually withdraw the cost for working capital. That means from the term loan. So basically from year 3 to year 4, which is convertible to bridging finance. For the development, they will start to construct the building, and the redemption of land purchase and working capital loan. So basically they can actually offset once they start to sell the unit, so they will start to get the money as well. So it's happened between year 3 to year 4, and then at the same time, end finance will actually be released. Once they launch the project, we as purchaser will start to apply for the loan. So like I always say, once the loan is approved, the bank has to release the loan within 2 or 3 days after we sign the SMP, which complete the documentation. Then the bank will actually release the money to the developers, but through a special development accounts. The purpose is, like I said before, in order to protect the buyers. So that means they have a special account, so the developer can only claim based on the progress payment, based on the progress the schedule payment. So basically, it happens between year 3 to year 5. At year 3 to year 5, if for strata unit, it takes about 36 months, that's why it takes about 3 years. But for landed unit, between year 3 to year 4, that means 24 months. And then from there, the buyers will actually service their mortgage loan interest. For most of the banks, they will offer interest-free for the first 2 years or until the project is completed. So once the project is completed, then we have to start to pay the interest. But if you want to get a normal loan, so basically we have to serve interest from the beginning. But it's interest free, or sometimes we pay interest only, and then we pay the capital later. So it's some things like based on one of the concept of mortgage that we have learned, just a matter of changing the payment. So if we use interest only loan until the project completed, so it will reduce the initial payments from the beginning. So basically, in this case, with interest free for the first few years. So until the project completed, depends on whether landed or strata. So basically, we don't have to pay the capital yet. But bear in mind, once we have to pay the capital, so basically it will become balloon payment, especially after 3 years. If we think that our income will increase, then we just go ahead with it. And then from once the project is completed, it's also depend on the offer. But if the bank offered, the buyers only pay interest for the first 3 years or 2 years, and after that they have to pay the capital plus the interest at that time. So basically, end finance will start from stage 5 here and stage 6. So they have to pay, or we have to pay up to 25 to 35 years, depend on how long the period has been approved for us. So that is how the bridging finance and finance work. So when we start to wait a minute. Okay. When we start to purchase the land from the term loan, so basically we can see here in terms of illustration, the purchase of land. So basically the land will actually revalue after receiving the development approval. So once the approval, planning and building approval has been given, so basically we revalue. So basically the price will actually increase, like I mentioned just now. So the original land price is 20 million, and then the developers will usually pay 10 million, and then the developer will get 10 million from a financial institution. This is for cash-rich developer. That's why I always say that the developers, although they have money, they don't use their own pocket money or company's money for the purpose of any development, because they also need money from financial institution. So they get a loan based on the site value that is used as collateral for that particular mortgage. So it's normal because they can use the money they have for the purpose of other investment. A good company, they will purchase site with development potential in the future. They use them, they keep them as a bank, as a land bank. So normally developer will pay about 50% of the total loan, but some developers even pay, even get a loan more than that, about 80%. So now the land is valued at 40 million. So at the beginning, for go to step 2, working capital and initial construction. Once the project has been launched, SNP has been signed. So basically, we have to start with the construction. So basically, for working capital, for initial construction, we see the term loan, which we assume that about 10 million, and the total loan to developers about 20 million, which is 50% of revalued land price of 40 million. So basically, we have 20 million. So 10 million plus interest, because we involve interest now, and plus 10 millions working capital. So basically, this is the amount involved by the developer, 20 million. So once we launch at the same time, we will manage to sell. So if we manage to sell the whole 100 units, so basically at 2 million per unit, so we'll have 200 million here on the assumption that we sell 100 units. So under the progress billings that we have seen before, under the third schedule of payment, so basically 200,000 average per payment by purchaser. So basically the total 2 million will be divided by 10 installment. So that means 200,000 average in terms of progressive billing. This is the average. But the real situation, we have to look at the third schedule of payment that we have seen last week. So now we redeem the amounts that the developers is supposed to get. So basically, for 20 millions over 100 units, so basically we have to pay 200,000 average per payment per purchaser. But like assumption that we have seen before, about 80% managed to be sold during the launching, then the 20 millions will actually be have to be divided to 80 units. So because 80% will involve 80 units out of the 100 units, so the 20 million per unit. So we now divide it to 80 units. So basically, the average payment by purchaser is 250,000 per unit. So this 250,000 redemption sum per unit will actually be settled over 5 installment payment. So for example, 50,000 out of 250,000, because of 80 units. So we divide by 5, we have 50,000 per installment to be deducted from progress payment. So in order to see this, you have to compare with the third schedule of payment to make it understand. So the banks usually specifies repayment terms of 24 months interest, like I said just now, if the bank offer 24-month interest during the construction period, and then 24 months principal plus interest to settle the land purchase loan. So basically, not necessarily the case, but usually the developer will get this kind of situation. And then we start to redeem the loan for land purchase and working capital. So during this period, the pay downs on bridging loan and substituted by banks. So the bridging loans will actually be released. And then normally when developer invoices for second and subsequent progressive payment, 20% of 250,000 is redeemed progressively and paid to settle bridging financier. So we take the 20% of 250,000, the developers will get it based on the progress payment. So basically the money will actually be used to settle the bridging finance. But this is also not necessarily the case, depend on the market situation. What I'm giving you example here is basically the situation which is based on the normal market circumstances. So we do not take COVID-19 into consideration. We do not take economy recession into consideration, but under normal market situation. So this is how it works. So the first charge by bridging financier would be discharged after 5 progressive payment. So 50,000 multiplied by 5 payment. So within 5 progressive payment, so it will be discharged already for the loan taken by the developers. And then we have end financing to house buyers. So basically the end financing will actually be given for purchasers like we have seen last week. So usually the bank will actually lend only 80% LTV ratio, that means the debt service ratio. To 80% of 2 million, it will become 1.6 million. And then the purchaser needs to deposit 400,000, which is 20%, because the LTV is or the DSR is 80%. So basically, the purchaser, people like us, need to pay 400,000, and then we take loan from the financial institution for 1.6 million. This is for high-end products, the 2 million price. So assuming the purchaser secures loans of 1.6 million from bank on these 2 million units, so he needs to pay the first 400,000 over 2 progressive payment before the end finance banks will actually pay the balance of 1.6 million progressively. So that means we have to pay 200,000 cash, and then another 200,000 cash, and then 1.6 million will actually be released based on the progressive payment. And the purchaser will actually service interest based on the amount of progressive drawdown during the construction period. So we have to start to pay progressive during progressive payment to include the interest. And then upon completion of project, purchaser will actually service interest and principal over 25 years to 35 years loan tenure. So that's how the illustration, how it works. So any questions so far?
Doctor, is it necessary 2 years for the progressive payment?
Yes, under the law.
Okay.
The period under the law is 24 months for landed and 36 months for the strata. We cannot run away. Anything else? No?
So far, okay. Wow.
Huh? I thought a question.
No.
I love this group because you can follow easily. So it make my works, easier. Because whatever I teach, you can get it easily. You understand easily with no question at all. So very good. So now we go to explanation of the bridging finance in detail. So just now it was illustration. So for general definition, so it is basically the additional loans on an individual or organization or the developer that are involved in the development industry. So we call this bridging finance. We do not, for example, for other businesses, when we try to get a loan for the purpose of expanding our business, so we usually do not call this bridging finance. We call this business loan, etc. Bridging finance is specifically designed for construction or development. So in terms of the features of bridging finance, it is given as a construction loan after the project planning has been approved. So like I said before the project planning has been approved, so basically we have to take the term loan. And then once we launch, so we take the bridging finance. The term loan can be converted to bridging finance. It is convertible. So basically, it will make the bridging finance more expensive if we do not pay the term loan, because the term loan is for a very short period of time, and then the interest is higher than the bridging finance. The bridging finance interest is also higher than the end finance. So that's the situation. Try to get rid the loans from financial institution as soon as possible. It is usually given for a short period of time. We start from the term loan to have the site works, infrastructure works, and initial operation of the main buildings, which I already explained before. And the interest rate is higher than the long-term loan. So because it's short-term, like I said, so interest rate for bridging finance is higher than end finance, and sometimes it's almost double, depend on the situation. So it's higher, and then as compared to term loan, it is lower than the term loan. But term loan can be converted, like I always say. And the interest rate charged by bank is directly determined the margins on lending rate. So the same like mortgage BFR we discussed just now, just plus there's a 2% or 3%, but the base rate for bridging finance is higher than the base rate for the end finance that we have discussed before. And then factors affecting the bridging finance, so basically because of the increased demand on real estate development. So increase, especially residential need, the demand will never stop. It keep increasing from time to time. That's why I keep arguing with other professional practitioner out there when they say that housing is oversupply. I said during the forum, I said, how do you justify? Why do you say that it's oversupply? Is it because no demand at all now? That's why there are so many units also, because no demand. He proved that there's no demand. I always argue that way. They say no, it's oversupply because the demand is still there, and then it's still oversupply. I said, and then why do you use the such word oversupply? If you say the demand is still there, I said that the demand always there because the proportion keep increasing. For people like you, for example, you haven't got any unit, you are still learning at the university. So if we manage to absorb all the overhang units now, and then they see the demand from you when you graduate, when you got let's say the normal economic circumstances, no more COVID, you are working, with good company, etc. Obviously, you also need to purchase a house. So the demand will always be there. And then you said that the overhang occurs because of oversupply. So I always argue that no oversupply for residential, but it is used the word overhang because the demand is always there. The problem is people cannot afford to purchase with the price we are offering, the market value. People cannot afford to pay, but they're still crying. They are still crying to purchase the unit. That's the situation. And then we have to come out with something to reduce affordability level. So I noticed that there are so many of you, I think more than 5 of you are doing affordability. But if you do not get anything out of your research, then because there are so many people have been doing affordability, but we still cannot come out. We still do not come out to the conclusion from my perspective, usually I look at from the financial perspective. My analysis, if you look at my papers, etc., usually based on financial perspective. But some people, they are doing this based on policy perspective. When you do it based on policy perspective, there is no measurement, critical measurement, then you cannot come up with something concrete. It is based on your qualitative analysis. So affordability is basically the main issue for the overhang. But do not use oversupply for the residential unit. But if you talk in terms of commercial, yes, I agree. There is oversupply because there is no demand. The same for industrial. Industrial depends on what particular unit. If you talk in terms of a terrace unit or the small unit, and then the semi-detached unit, so basically there is oversupply. But if you talk in terms of the build to suit purposes, that means they purchase the land, they develop the buildings, the factory according to their own requirement. So basically, this kind of property, industrial property, is still in demand. So basically, it depends on the sector. Of commercial, like office, you can say the oversupply because obviously there is oversupply. Don't need to construct anymore. And then during COVID-19, especially, people like to work at home. People like me, you can see that how enjoy I am, teaching you, talking to myself alone without any question from the student. And then the student also very good, they can understand easily. That's why I'm very happy. So when people like to start to work at home, and you also learn from home, you also become very happy, more relaxed. I cannot see you. Whenever I ask you to show your face, you don't want to show me your face. So I'm not sure when I call your name, you never say hi, never say. So I'm not sure whether you are still in the class or you are in bed, but you turn your computer on. So I don't know. So basically, all of us are enjoying ourselves. You enjoy yourself, I enjoy myself. And then the commercial offices out there will become vacant from time to time because people start to work at home. But there are also certain disadvantages if you use this kind of working. People like you, for example, who are still fresh, you need someone to guide you. You need your boss to give you works, to assess your work, etc. If you do like this, for learning is okay, but not for working. So in actual fact, what I'm trying to say here, when the market is normal, when the COVID-19 is no longer in the world, and then we live, like before. So basically, we need to go to offices, especially for young graduate. Otherwise, you will never learn the actual market situation if you do not work in the office. If you work at home like you are learning now, so I don't think we can actually come up with someone that really knowledgeable in the future to represent the professional. That's why I can see the disadvantages when you become a professional if you work from home. But to be a student, yes, it's okay, like I said just now. So you learn whether you are in the class or you go away, so no one can see, only you knows. But remember, you are the one who is going to answer the question during the final exam. Although you can copy, you can the UM asked us to find a way to get rid of cheating. So I believe that the lecturers also, as they said, ask you to use webcam, etc. So For me, I don't know, my personal point of view, it won't work. There are so many ways of cheating, because now also some of you are cheating your own self, not cheating the lecturer, because you switch on, you join the class, after that you go somewhere, sleeping, whatever, I don't know. So basically that is also the way of cheating in the classroom. Even this basic thing also you try to cheat, and then how about in the exam? So that's why my style is all of my question must use knowledge. You must understand the lecture. If you cut and paste, you won't get marks, because the question do not ask you to cut and paste. The question asks you to critically evaluate based on your understanding. So if the book or the notes are right in front of you, if you cannot understand, if you don't understand, or you do not look at what the question asks you properly, you just cut, because the question asks you about bridging finance, for example. So you have this note, bridging finance, and then you just cut and paste, retype everything. You won't get marked if you do not answer the question. So that's my style. But some other lecturer, they may give you direct question. So what factors, for example, affecting bridging finance? That's straightforward. But my question would be that way. It could be something like, with your own example, with the aid of a diagram, etc., that kind of thing. So you have to really understand the diagram. That's why I ask you, to ask me a question all the time. But keep quiet when I ask you again, ask you a question, you also keep quiet. So I don't understand. I assume that you like that way, whenever you come to real works, real situation, when during the interview, because I also interview people, not only your senior, but can be your group as well, if you have interest. So basically, when during the interview, we know that this particular person interests. So something like that. That's why we always ask you to present reports, certain subject like finance. You don't have to present, because the syllabus which was developed when I was not around, only 2 tests. That's why we're going to have another test this Friday. Otherwise, you're supposed to submit your assignment this week. So that's the situation. So basically, bridging, in terms of methodology, bridging fund is given either by means of term loan with a fixed repayment period, we have discussed before, or overdraft facility, or a combination of term loan with fixed repayment period and overdraft facility, or loans that can be arranged either in the form of direct loans or a syndication loan. So what it means by a syndication loan is for very big project like Putrajaya project, for example. So it's something like a consortium. Bank will form as a consortium, although we do not call it consortium. But so many banks will actually come together, and one of the bank will become a lead manager, especially from an investment bank. Usually will be led by a professional investment bank. Last time it used to be under Mission Bank, now investment bank. So basically, they have to come up with a certain amount of fund, because if one particular bank, use offer approve the loan, so basically they also do not have enough fund to support main project. So basically, this is called syndication loan. And then for direct loan, so that means the loans by a financial institution to its own customer without the use of third parties, such as dealers, where direct lending gave the lender more opportunity to screen credit applicants. So you have learned this. The total amount of loan from a bank or financial institution is smaller and has lower risk. So you have learned this under mortgage last time. So basically that is direct loan. We approach the bank will assess our eligibility, and the debt service ratio at that time is applied. So basically we know our eligibility. So that is direct loan. We do not have to go to the third party, go to broker. We don't need broker because we learn real estate, we learn finance. So those laymen usually they do not know much about real estate. They don't know much about the finance, so usually they will go to a broker, and broker will charge you about 20% of the total loan. They do not tell us in advance that they will charge. They just say that they are going to give you advice. And in fact, you as a real estate graduates can also become, can do brokerage services in terms of mortgage broker. You can advise your client in order to make money. So, but the thing is, you know, if you do this kind of business, even to do this, you have to diversify. Do not focus on brokerage service only, because sometimes it's a bit hard to find a customer, because your pay will only be based on the advice given by the customer, and then if the customer approach the financial institution, so through you, then they will get commission. So sometimes it's a bit hard to survive, but if it really, if you manage to close down the sale, so basically you will make money. So that is direct loan. And then indirect loan or syndication loans, we have to go to the third party. If you remember the first weeks of the lecture, we talked about deficit economic unit. So if you can remember that, so basically the same concept applies here. So a group of commercial and investment banks agreed to advance a portion of the fundings, and it will be led by one particular manager, especially from usually from investment bank or merchant bank. So I've explained in detail just now, including example. So now we go to continue the difference between direct loan and indirect loan. So basically no different except in terms of documentation. So merchant bank or investment bank will become a lead manager. Commercial bank or financial institution insurance company will be the lender. That means they become as part of the consortium. And the manager provides managed syndicated loans on behalf of the borrower after obtaining the agreement. And the bridging fund is paid in stages. All we have discussed. Payment usually between 70 to 80% of the requested total cost. And the loans are not given in full, where the bank requires the borrower to jointly bear the risk. So basically, they don't want to take the risk alone. That's why they take. They need a financial. They need, you know, like I said, for cash risk company, they can come up with the cash to purchase the loan to purchase the site for 10 million, and then to come up with another 20 million to start the development until they get manage to sell. So basically, they can do that for cash risk company, but they don't want to. So the reason is because of the risk involved. So if the financial institution also don't want to get involved if the project is very risky. That's why they have to come up with the assessment, the 5C's assessment, in order to see whether the project is feasible or not. And then the banks and the borrower are required to complete the project successful, of course, and the bridging finance is usually paid on a quarterly basis. So based on the third schedule of payment, like we have discussed, the project manager must ensure that quarterly progress report is submitted. So in terms of conditions, what we need for the bridging finance, number one, we have to identify the lending institution and provide feasibility study report. So you'll make a lot of money based on this. People come to you if you are the real estate consultant. But if you do valuation only, sometimes your customer will not come to you. You must have research on and consultancy because you can cover everything. So you have to come up with the feasibility study report, and then based on that, we have to justify the viability of the project. So this is the first thing that the bank want to see. And then the bank will review the application and ensures the developer meets all the requirements. So the conditions for the bridging finance is submitting paperwork for the firm's profile, including track records, profit, etc. Information of the project and report feasibility study on the project, cash flow, the property market situation, a perfect measurement of supply and demand, research on population, etc. So this is also your job. That's why, you are the most, I think, seek after profession when we deal with development project. And in fact, if you look at Sime Darby, Sime Darby used to be named as Golden Hope. So most of the people there come from real estate background. So they develop, they become developer. 90% of the shareholders come from real estate people. And then about 50% come from Reading University, that means my senior. So when I was in the market last time, they also asked me to join them, but I don't want to. So now it become from Golden Hope, now become Sime Darby Properties. But most of the seniors from Reading University, they have split it into several other companies. So one of them now become the CEO of TR Action, and one of them got stroke. One of them become the COO of the Permodalan National Berhad. I can recall, one by one, because I still keep in touch with them. The only thing is I want to be a lecturer, they want to be a corporate, so that's why we have different lifestyle.
Doctor, do people usually become valuers first and then go into research?
No, it's up to you. It's up to you.
So, got some people who go straight into like developments and work with them, is it?
Yes, but if you go under research and consultancy, that's the first step that you want to be a consultant, So when you become a consultant, at the same time, you learn about valuation, you learn about agency, you learn about marketing, property management, etc. But if you go under valuation section, you do valuation, only. You do not get yourself involved in feasibility studies. You do not get yourself involved in marketing, in research, that kind of thing. but you only focus on valuation, comparison for small company. For big companies, sometimes you may be able to get, challenging valuation job. For example, jobs that involve armed forces, for example, how to convert that, make it commercial, etc. Or, quarry valuation, that's something that's challenging. So basically, if you do valuation with a small company, you only do valuation for single story terrace, for apartment, or, normally use comparison, no challenging. For big company, you will be challenging. But you still do not do, you don't know the actual situation. You know in terms of the value of the property. When people ask you, what's the value of this particular property in Cheras, for example, and then you can come up with estimated figures straight away because you have been doing it all the time. But when it comes to research and consultancy, you do not do valuation for, comparison, using comparison, do not do for terrace, etc. But based on your knowledge, when you do consultancy, you also know the rough figure automatically. What is the price of a semi-detached unit in Cheras? So you know already because you are doing the research all the time, consultancy all the time. The same as valuer, they also know, they give the same price because they do a proper valuation report. But we are giving estimated figures. They have to come up with a real value. So based on the experience that you have from research and consultancy, you can also become a registered valuer. You can also, get involved in valuation. But it's more on the complicated one. And then you also do all the feasibility studies. That's why you have, to come up with the marketability analysis. You have to come up with the property cycle analysis. This cyclicality aspect will normally be done for those who involved in research and consultancy. Valuer also do not have a proper property cycle. So it's a lot easier for us to predict, so based on our experience. So back to your question. So basically, if you do research and consultancy, it will be good for you to gain experience before you really start, if you think that you want to have your own business evaluation. So basically you will be will have a vice professional as compared to valuation only. Otherwise you rely on valuation. I told you this because even during my time in about I think 10 years back, one company, they approached me. Not Ain'ni was my main company before I decided to join But after I joined and then this particular company, they approached me, valuation company, not the developer. Developer also stopped me before I joined. But this particular valuation companies, real estate company, it's quite a big company. Some of your senior are working there, but they approached me. They want to marry me. So they approach, they offer me a post, but I say that I'm with It's okay, you can still work in but you come to our office once a week. So let's say you want to come on Thursday, you do your work in from Monday to Wednesday and Monday to Friday as usual, but on Thursday you come to our office. So we'll give you salary based on that as a director, because we do not have people who have experience in research and consultancy. So we want to have to establish a research and consultancy section in our firm. So I don't know, I feel that people still need those who have a real research and consultancy background. If they really want to find, why don't they offer? I think we don't have enough time. I think. Why don't they offer valuer? Because they know that valuer cannot do talking much, but cannot do. That's the thing. But when we ask about value, then they know much about value. So I don't know the way that you are trained here. That's why sometimes I disagree with the lecturer in our department, because they are too rigid. You know, the way that they think to make just on the assumption that everyone want to be a registered valuer. That's the mentality. But it's not the case. When you go out, you don't want to be a registered valuer also can. You want to set up your own business also can. You want to be a successful property investor also can, if you have money to start to be an investor. But for me, if you start with research and consultancy, that's the experience that you need. You will actually have, you know, when you want to be a successful investor, you have a very knowledgeable. You are a very knowledgeable person in terms of the market, foreign direct investment, and then all the laws that will affect the real estate. So you are actually practicing all the subjects that you have learned during your 3 years period. After you have got enough experience, and then you decided which one you want to follow. Rather than to go to do property management only, do property management all the time. Building maintenance and that kind of thing. Or you want to do variation, do variation all the time with all the standard format of variation report. It is good. It is good. But the thing is, that kind of mentality, given by certain lecturer, I don't have to mention the name of the lecturer because they are also your lecturer. I'm also your lecturer. But the way that we think is different. We take the best one that you think is correct for you. If you think that, you know, other advice is good, then just follow. Because all of us are advising our students because we want you to be successful as a professional. So you take and you think which one that you think good, then just follow. You think no good, then forget it. You also have senior that have been working, you know, for the last a few years. You can also ask them. So I think we only have about 8 minutes more to go. We try to finish as much as we can because I'm talking nonsense too much. You don't like it, that's why you keep quiet, you know. So the condition, submit paperwork to the firm profile, including track record. We have discussed this. Information of the project and the collateral. The site will actually be used as the collateral, and then the sources of repayments. We have seen the requirement before. So basically, the bank will actually stress on the minimum level of sale. So this is depend on the strategies. So quantification of bridging finance by Bank Negara Malaysia. Land to be developed must have been converted. Must convert first before we can develop. Developer's license has been obtained. Once we have the developer license, then we can actually launch the project. The same thing for advertising permit, and then we can launch the project after that. And the building plan has been approved, and then we can start to develop, construct the building. The terms and conditions for bridging finance, total amount quantified based on the cash flow. That's why your cash flow is very important. The title is normally coincide with the construction period. So basically, you know, we need individual title before we can start the project. And the interest rate, we have discussed this. Repayment within an agreed time period or the redemption of title. The securities, the legal charge, or on land subject to evaluation by the valuer, and commitment fee charged on a per annum basis for a number of days, and then finish. I thought we still have a lot. So basically, you can see your prospect, you know, in doing real estate costs, because but it's also subject to economic situation. Like now, most of the architects, they are crying already because they feel the virus in the company, not the actual virus, but the effects of the virus on the company, because they don't have project now. No one want to develop. Developers also having problem. Your senior, who's got a scholarship from big companies, have been terminated as well. I think you know who they are. So because developers also big developers, I think AK, are you here, AK? AK? Look, the name is here. When I call, no answer. That's why I said, very good. This kind of learning, Okay, never mind. Some developers, they even kick out their staff because they cannot survive. So if they keep the staff for nothing, so all the money they have now will actually become less and less, and towards the end, the company has to be closed rather than closing the company. So better kick out the staff first, especially those who are not confirmed yet or who normally have problem, who are not serious with the work, do not bring money to the company, etc. So they start to kick out. But if you work with a real estate firm, all those, it seems a bit, the name is not that big as compared to architects or QS, but that from our own perspective. But we are very important in the market, particularly with all those experience, then we are highly demanded. So basically, we can survive. None of valuation firms are close their doors right now because we still have project, but of course lower than not as many as before this, but still have project. We can survive. Architects and QS no more project, but we have project. So that's why like we have discussed it now. We have feasibility report. We have to submit valuation report, and then auction as well. So many things. So you don't have to worry about this profession. Depends on what you want to be. Some of your senior do not do valuation, they do insurance. Some of them do have their own business in laundering, not money laundering, but so many things. One of them even open a business in car servicing. But basically, the real estate knowledge is there. Even you are not doing real estate business, you are doing other business, but because real estate knowledge is there, so it will make your company, because the company will become bigger and bigger by purchasing the correct real estate as the base asset. Even Trump, the previous UN president, he become rich because of real estate, not because he's a real estate man. But you, because you learn real estate, you have more advantage. So next time when you become very rich, through the property investment, etc. So basically, you don't know me at that time. I'm okay. So who is this old guy? I don't know. I never know him before. I'm fine with it. But when you become someone successful, we as lecturer will become very happy. This is our duty. So whether you tend to forget us or not, that's up to you. At least we have done our duty. So some of you may think that, this old man